Michael Robinson, Chief Technology Strategist at Money Map Press, and Brett Sifling, Investment Advisor Representative at Gerber Kawasaki. Great to see you both. Thanks so much for being with us. Michael, what are your thoughts on some of these semi stocks, some of which have been at highs, right? The stocks were as at a high, and the analysts are very positive these days.
Well, simply put, no chips, no economy, right? The American economy, as we've been talking about for some time now, Nicole, is very tech-centric. It's tech-driven. It's every aspect of it. The previous guest mentioned 5G. That is a massive upgrade cycle that is part of what's underpinning the rally in stock in semiconductor stocks. Now, remember, a lot of those names were beaten down way too much earlier this year on growth concerns. Chip sales are going to probably finish off about 12% for the year. Part of that was just a slowdown, worries about what's happening with China and the United States. Good news is we're going to see an acceleration of growth going into 2020. Part of it, as we mentioned just a moment ago, was the 5G upgrade cycle. That's all phones, all tablets, all laptops, all data centers, small cells. Everything is going to have a 5G chip in it. That's part of it.
Right.
But this is a pretty stable $420 billion a year industry.
I wanted to ask you, Brett, what are some of your thoughts on what you're seeing here when it comes to technology and how everything is sort of tech related, right? Disney Plus. I know you always keep a keen eye on names like Disney and Tesla, which is so much of electric vehicles and AI and all that.
Yeah, absolutely. We're a tech-focused firm, and we're investing for the future. And companies like Disney, even that's traditionally viewed as like a media company, I'm now looking through it at a tech lens, and because of that, can see some PE expansion in the stock. We think that they could get 100 million subs to Disney Plus over these next couple of years. It's a very exciting time in technology.
So, do you like those names, Brett? I mean, what are those picks for you, Disney and Tesla?
Yeah, Disney and Tesla are definitely both picks. Another one in regards to the 5G revolution is Apple. There's recently a leak that says maybe no more than 6 iPhones could be released on this next upgrade cycle, and we really view it as kind of the next super cycle for Apple.
Wow, that's a lot of phones. That would be something. Michael, I know you liked some names. You said you liked Teradyne, Texas Instruments. Why?
Well, in small caps, I like Teradyne because it is a play on both the semiconductor. It's a great back end. You know, I'm out here in the land of the 49ers, so we always look for pick and shovel plays, right? You want to buy Levi, you want to own Levi's when all the miners are out here. That's what's going on with Teradyne. They do semi testing and quality control for the semiconductor industry. So they basically are a boom on everything it's related to semiconductors. It's been growing at about 21% a year. It's still a nice cap size at $12 billion. So, and there's not too much float out there. So that's one with a lot of upside. Also, great play on what's happening in robotics. We're at a 50-year, the best unemployment rate we've had in 50 years. So workers are actually glad to see the bots come in and help them out because they're getting overworked, right? And then so there's that. The other thing I like, the opposite in terms of market cap, is a big cap player that's actually growing. The margins are getting really good, but growth of about 20% a year in earnings for Texas Instruments, which is on its way to becoming a dividend aristocrat. So it's got almost a 3% yield, 2.85 in a market starved for yields. And they're into everything that's chip related. So those are two really good plays. One is in the small to mid cap, the other one is in a mega cap stock.
Right, and dividend aristocrat is always a good thing. I wanted to ask you, Brett, when we talk about technology overall, is there any hurdles or worries? Because tech had such a great year this year. Does it continue?
Yeah, I mean, tech has definitely had a great year, and I think it will continue. One major risk that is looming out there is just the political parties really talking about the issues of like antitrust or just the tech dominance in the marketplace. So I do expect to see a lot more volatility in 2020 with these tech names than we did in 2019.
Yeah, we'll watch for the elections because there's a lot really circulating about which people like what. So we're going to see on that one. Great to see you both. Thank you both. Michael Robinson, Chief Technology Strategist at Money Map Press, and Brett Sifling, Investment Advisor Representative at Gerber Kawasaki.